If you are new to the stock market, there's this popular saying, until I sell, it's not a loss. Which means that no matter how down you are in the stock, it can always go back in the other direction. You can always recoup your money. Right? But if you sell, you're out of it. That's when you lose. And this saying is true when you are an experienced trader and you have a trade plan and you know when to average down and average up and when to hedge and when to get out of a position. When you're new, if the only thing that you know, these are the big stocks, these are the long-term stocks or the longer-term swing trades I should take, and when it dips down, I should, hold my position because it's going to come back up. What you need to understand is the minute a stock goes negative and you're red on it, you're losing money. It's a loss. You can hold it all you want, but until it goes back to break even and then go green, it's a loss because your account balance is going to keep going into the negative on this position. And if you are not experienced and seasoned to understand how pullbacks and dips and corrections actually works, you will not be in a position to understand how long do I have to hold this thing in the red before it goes back positive? How much should I allow this stock to dip before maybe I cash out? But you never anticipated being down $10,000 on this position or $5,000. I'm gonna say it like this. Some of these other investors who you're listening to, they would have never held a stock dropping $150, $170 on them. They would have had some strategies to get themselves up out of that before that happened. But you didn't know about scaling and when to dip by. And you took as many shares as you could take at the top, and now it's dipping down, and now you're stuck. What is your max loss? When should you average down? When should you average up? When should you get out of a position? When it comes to investing and swing trading and long-term trading, you still have to have your stops. When you have a trading strategy and a plan, and you know your outs and your limits and your dips and your average points, then the whole it's not a loss until I sell, then it becomes valid to you. But until then, you run the risk of destroying your account. And when you become down so much and you start asking people for help, the first thing they're going to say to you is, well, why'd you hold? What do you mean? I was supposed to hold. Right? It's a long-term stock. I'm supposed to hold on to the dip. I'm not supposed to sell, right? And their answers are going to be, nah. You don't blindly just hold on to this. You got to have some hard stops mentally in your head. You got to have an exit strategy at all times in the stock market. Hold it dip. Hold it. Don't worry about it. Zoom went from 580 and now it's trading at like 330, 340. Right. Imagine holding that dip. And now you're like, well, listen, I'm down so much money. Should I hold it? I bought it at 560, and now it's trading at like, 480. Should I hold it? What should I do? I don't know. I'm down so much money. I can't lose as much money. What should I do? I'm gonna hold on to it. It's not a loss until I sell. And now it's at 400. Oh my gosh, what should I do? It's not a loss until I sell. Now it's at 340. What should I do?